This has made for a challenging trading environment with many names hovering between key support and breakout levels, and no sector exemplifies this more clearly at the moment than crypto. Now, everyone on X has been talking about the dreaded Hindenburg Omen, and yes, it is named after the 1937 blimp disaster. Now, the Hindenburg Omen is a market breadth indicator that flashes when both 52-week highs and 52-week lows occur in unusually high numbers on the same day across markets. It signals internal conflict and instability beneath the market's surface. Now, this omen, it basically means that markets can't decide. Strong names are making new highs while others are breaking down. Historically, clusters of these signals have preceded major pullbacks a la 1987 and 2008. But the signal has also appeared during normal consolidations, and the last two instances of the signal actually saw the market moving higher for another 3 months before a correction, which actually could align well with the thesis we've been discussing of a correction coming in early Q1. Now, institutional behavior doesn't yet suggest that there is panic in markets. M&A activity remains strong, bond demand is high, and volatility hasn't spiked in a way that typically it would before a major market crash. What we are seeing instead is a market that is losing structure, not necessarily confidence. It's a rebalancing more than a collapse is the way I would think about it. And the challenge now is staying tactical as traders, reducing exposure in overextended areas, and using shorter term trades while the foundation firms up. In essence, I would say it's not time to panic because the why behind the signal is often more important than the signal itself. And we still have a rally that is being led by true earnings, not hype and vaporware. This is not the same as the dot-com bubble. Now, there are real cracks under the hood that we need to be aware of too to balance out our view. And the only one I'll touch on today, because we looked at more of them on Monday, that really shocked me is the $29.4 billion that the Fed quietly injected into the banking sector today. Well, we just about doubled that in a single day. Something is clearly going on in the banking sector that we need to be wary of. And while Jerome Powell said that they were not stopping QT until December and didn't really hint at QE starting anytime soon, it has clearly already been going on quietly in the background.